All right, we are live at the Troy Show. I have a very special guest today. It's Cary Prejean, and I mispronounced his name for like 2 months straight because it's
Close
Prejean
enough, Troy.
French.
Prejean
Yeah.
is French, yes.
Oh, see, there you go, Prejean. And he is a very skilled individual, so this should be an interesting show. He's not only a business advisor, he's a CPA, and he helps other CPAs in order to build dashboards that make people more valuable. If you have the right information in front of you, you kind of know what you have to get done. So if anyone's there, feel free to go ahead and type your name in and go ahead and let me know where you're from. Caesar's there. All right. Caesar, where are you calling in from? I'm gonna tell you, I'm from Nevada. I moved here about a month and a half ago, so I'm in Las Vegas, Sin City. So people think I'm doing all this crazy stuff, but I'm actually just in the office working. I have no idea what's happening. I moved over here a month and a half ago just to be closer to family. So Cary, tell me where you're residing from.
Baton Rouge, Louisiana. Go Tigers.
I know, and don't they have a large selection of liquor there?
Uh, yeah,
They're
I mean, you
known.
can get it just about anywhere.
Yeah.
Convenience stores, supermarkets, the big box stores.
Oh my goodness. Yeah, and they have a lot of specialty drinks there, I hear.
Oh, yeah, we're talking about Sazerac Bar, things like that.
Oh yeah,
Down in the
yeah.
French Quarter, yeah, they have all kind of stuff. I don't really do a lot of that stuff, but yes,
You're like
some
me.
people.
You're like a hermit, just doing business, head down,
Right,
head down. All. Yeah, I don't even go uptown. I'm on the south side. We
yeah,
got Robert Butch. Butch is a great guy. He's from Atlanta. I lived in Atlanta for 20 something years, and then we have Penny from Wyoming. So if anyone else wants to jump in, feel free to go ahead and tell me where you're from. And also, this is kind of an open-ended conversation. So if we're talking about something, feel free to go ahead in the comments and ask a question or a comment, whether you agree or don't agree. Oh, hey, Lisa, how you doing? From Kenya. She's all the way from Kenya. Lisa's a great person. So let's go ahead and get started here. The first thing I want to do is I really want to talk about Cary Prejean and what he's doing. So I'm known as a not so boring LinkedIn guy. I help with the 3 Bs, business, booking, and branding, mostly on LinkedIn. And I don't want to concentrate on me. I just want to get that out of the way. But Cary does some very specific things. Cary, tell me about yourself, your background, what you're doing, and how you solve these problems.
right. Um, Well, I mean, what I'm doing basically is business consulting, and I have an accounting background, CPA background that I bring in. Part of what I do is like fractional CFO
Hmm.
and help the business owner get in touch with their numbers because most business owners manage by how much cash is in the bank and how much have we sold. They're not always aware of what their gross margins are, what their operating expenses are, what their bottom line is, or what the financial ratios are. They have, I, I've run into business owners haven't seen a financial statement in 9 months. How you run your
Yeah,
business like
that's
that out of
most
9
of
months?
us. That's most of us. That's
Yeah.
that's not
So
that's very common not to have that information
right.
on there.
But even the people that get a monthly financial statement get it at the only 15th, 20th of the next month. Well, what
Hmm.
can you do about this month when you arrive at the 15th or 20th of the next month? Nothing.
Right.
Month is over. So what I try and get them, or not try, I do get them what's called actionable financial data. In other words, it's data that you can take action on now to
Hmm.
intervene on something that may or may not be going well in this month, so that you don't have to wait. You don't get the disappointment on the 20th of next month. You can take action now and maybe change things up. Usually you
Oh,
can.
you want to mitigate any risk or any issues
Well,
and
you want to,
identify them probably first.
yeah. What you want to do is you want to mitigate poor results. In other words, and the way you do that, way I do that is with dashboards. In other words, every week the owner and his leadership team or her leadership team they also get a set of dashboards that tells them how sales looking so far this month compared to budget. Um, what's the inventory look like? What's the receivables, payables look like? How are they aging? Or your receivables getting too old? Because the older a
Hmm.
receivable gets, the less likely it's going to be collected.
Yeah.
Is your inventory getting old? Is the inventory, relatively new? Or your taxes being filed and paid? Again, it depends on the business. E-commerce business, I've been working with a few of them lately.
Yeah, give me an example of a particular client and
Right.
how you went through that process.
Right. So the e-commerce people, they can watch their sales all day long, right? Because everything's being sold over the internet. It's all done by credit card. So what we measure traffic, how much traffic is coming to their website, and we want to break it down between new visitors and returning visitors. And you can look at that and see how much traffic getting. If you're not getting enough traffic, you can boost your ads. And we have this one client in particular.
Oh, so that's the actionable data part where you're knowing that this is dipping beyond a certain level. You have to make a change right now.
Right. He's got it down to a fine art. Now that, put it on, I'll put it on this bigger schedule that shows him not only his daily sales, the number of sales, the average size of the sale, and then comparing that to the rest of the months of the year, as well as we have it looked at. The last 2 years data is there as well. And it sounds like a lot, but really you're looking for trends, right? So he uses it to see if his traffic is dipping. Usually that means your sales are dipping.
Okay.
Right? So he's got it to where he knows, okay, if I put this Facebook ad in, I'll put this Instagram ad in, or we use these emails, or they can do messages to SMS. They work closely with their, I guess, the marketing company, the people actually send out the stuff. And they can drive sales by putting the ads in the right places, the right kinds of ads, the right time. It's amazing to watch. So they get a daily sales report that shows them what were your sales of the day, how many sales, what was the average size sale, what was your traffic, and then again month to date against budget, year to date against all previous months, prior 2 years data. And really what it does, it just allows you to see what's the trend. Do you do something to correct the trend? If he didn't have that, he could probably see what he's getting every day, but he wouldn't have the ability to take that corrective action and place ads in the right places, or get them to bump up the SMS messaging or the email messaging in the right places to boost traffic, to boost sales. Does that make sense?
I think it does. It does to me. I would probably ask that maybe if we took a step back, and when you approach this client in order to build these dashboards, I think you have something called the well-oiled machine process.
Yes.
Did you use that process with that particular client to kind of identify all the players and all the mechanisms involved in a business? How did you?
Right. The dashboards are the first part of, the half of, I say half, they're probably 3/4 of the actionable financial data. There's three things. There's actionable financial data, right? There are processes and procedures, get them documented. In other words, building block. What happens with the business is as they grow.
We're talking about the well-oiled machine process.
Yes.
So there's three areas of that. Okay.
3 steps to it. Second step is to develop processes, right? Because what happens is businesses grow. You take on more people. Unless you have those processes clearly identified and detailed that everybody's aware of them, not just aware of them, but everybody is indoctrinated with them and everybody's following them, everybody's going to kind of do their own thing, which is what happens.
Yeah, they're going to be kind of doing it, not doing it.
Well, they're doing it their way, which may not be, why can you get a handful of teenagers from a fast food restaurant?
Oh, the processes are very easy. Yeah.
Yeah. Well, everybody knows how to make the fries. Everybody knows how to make the Royale with cheese. Everybody knows how to make the hot apple pie. There's no guesswork. There's no guesswork to it. It's all written out. Same thing with processes in your business. And again, you don't want to go crazy to where you're documenting every little move, but something that everybody can, kind of like a recipe, add 2 eggs, cup of milk, flour, syrup, whip, whatever. Clear, easy to follow instructions on how this is how we do this process. This is how we generate a sales order. This is how we receive inventory. This is how we ship shipments. This is how we, whatever it is. And again, once everybody knows what they're supposed to do as well as what everybody else is supposed to do and how it all works together, and when they're supposed to deliver their part of it, everything works well. And generally the biggest part of that is getting the business owner out of the way. Because the business owner is generally in the middle of it. I mean, listen, it's the business owner's business. It's their baby, their identity, their wealth, their lifestyle. Everything's tied up in their business. So it's very hard for them to like give the baby over to the employees and take care of it like they would take care of it. But with documented processes and a good leadership team, that their main thing is to make sure everybody's following the processes. The business owner can step back, because what happens when you don't have that? Business owners run around insisting, "Do it my way, do it my way, do it my way."
Well, there's a lot of over the shoulder viewing and micromanagement that slows the process down. So once a process is created, it can run, and I would imagine the owner just needs to know where the pitfalls are. So maybe the pitfall could be in the instructions or a particular scenario. And I'm thinking off the top of my head, if I had instructions on how to do something, if I had financial data or the right data saying, oh, I need to purchase ads, for example, like what you use, I know this process takes this long to do. So I know I need to run a ticket in or ask someone to run these ads. The ads have to be created, approved, moved over, and then you have X amount of time to do that. So you're aware of that. Oh, yeah, this will take a 48-hour process. This is a 3-day process in order to get this thing moving. So I would imagine it's a huge thing for peace of mind, right? For the owner.
Yeah. Again, the owners that I work with that use, the Actionable Financial Data, use processes, what they get out of it, universally they report, I have such peace of mind getting these things every week. I know that everything's going well. Everybody's aware of what's going on. The leadership team, the management team manage the business the way it's supposed to be managed. Processes are there. There's no guesswork. I'm clear. I've been clear about what results I want produced, and they're producing that.
Yeah.
And that's what's missing in most places. That the owner is not that clear in detail about what results they want to produce.
So he thinks he's clear, but he's probably not
clear in his head. I have this one couple.
Different.
I have this one couple that, and they admit it all the time. They have conversations at home, and then they go to work, and they assume it's like everybody else knows what's going on, and
the osmosis.
It's like, it doesn't work that way. In fact, we've had conversations, and he's like, "Well, did you do such and such?" It's like, "No, I didn't know you wanted to do so." Yeah, we had a conversation about that.
I said, "You two had a conversation on it?"
Yeah, I said, "When?" I don't, and I have a pretty good memory. It's like when. I said, was it a phone call? Was it a text?
Oh, yeah.
I don't remember.
So they're moving very quickly, in other words.
Yeah.
And they got to slow down in order to speed up. So I think a lot of the people here are CPAs. So I like to talk about like just the main benefit of a CPA using dashboards. So I know that's important. It's important to show data as a CPA, but it's also important to not just be in the limelight, but be the person that the other business owner can go towards a CPA and say, you know what, this information is very valuable. And for them to be more of the coach of a football team, so they can say, now that we know that this data is here, these are the elements that we may to bring in, or we may have to bring in an advisor for this, or a technical person for this, or a designer for that. So I want to really talk about CPAs and the benefits of having these dashboards.
Right. Again, I'm an accountant, did this CPA thing, worked with Arthur Anderson's tax accountant. Again, I've been around for a long time. The problem I see with the traditional accounting outlook is that it's always about, this is what happened. I was told early out into the workforce, a good accountant is a good scorekeeper. Well, That's great. A good scorekeeper. And the scorekeeper is going to say, this is what's already happened, but nothing about, and this is how you can play the game better. Right.
Right. So scorekeeping versus strategy.
Right. CPAs are used to saying, here's your financial statements for last year, last month, whatever. Here's your tax return. It's all about compiling what's already happened. Right. Very little about, and I've seen business owners ask their CPA, like, how can I make more money? The cash is not in the bank that the profits are showing.
Right. There's a deficit. There's a deficit of cash flow, for example.
Well, yeah, but the typical answer is, charge more, raise your prices, sell more, reduce your operating expenses. Well, those are kind of obvious, but how do you go about doing that specifically? With actionable financial data, with the dashboard, you can actually point to, things like, okay, here's your cash flow, cash projection the next 6 to 10 weeks. you got this big payment coming up in 5 weeks. It's going to wreck your cash flow. So you need to start paying for it now. Go to your banker for a short-term loan. Speed up some receivable collections. Talk to some vendors that you're going to extend your payment with them. Do something to make your cash flow match what's coming, because you got this big tax payment, insurance payment, something's coming up.
Right.
Some out of the ordinary kind of.
So if they had, for example, a burn rate of like 30K a month going out, right? And sometimes they get 100,000 but it's further along. You're like, well, we have to reduce that, say 30K burn rate. And how do we do that? I guess one way is to perhaps extend that cost, and what you mentioned, to talk to the vendors to extend those costs, and not just cut out things that are not necessary, but maybe you have the ability, or the CPA can see the ability to reduce that 30K burn rate down to, say, 15K or 10K,
right,
or whatever it is, and extend the payments
look at
out.
receivables, like especially your key vendors that you have good relationships with. Say, hey, I have a big whatever payment coming up. I need your help. I need, instead of paying you in 30 days or whatever it is, I need an extra 30 days for the next couple of months. And most vendors, unless they're in a cash squeeze, they're going to go along with it. They want to keep your business. Right?
Yeah,
Same thing with receivables. So you have some really good customers that they've been customers a long time. Hey, can you pay your bill a little early this month? Or you want to buy some more for cash? And you'll find out who can help you and who can't. But again,
so if there's an 80-20 rule, like 80% will say, yeah, they want to keep, 20% may not be able to do this. It's better to ask. It's better to see what you can do, what you can't do, to kind of solve that issue. Yeah.
And one of the, and again, this is sort of some psychology, but one of the ways to increase, or what's I'm looking for, increase the depth of your relationship, to bring the relationship even closer, is to ask somebody else to help.
Yeah.
No kidding. When you ask somebody for help, and they can help you, it binds the relationship a little closer. Also, you can go to your banker. Hey, I got this big payment coming up. Insurance in particular, you know what bankers love to do? They love to finance insurance premiums. They love it. It's a no-brainer for them. So if you got this big $100,000 insurance premium coming up, but it's for the next year, go to your banker. They'll be happy to make you, that probably won't, they may or may not ask you even any down payment, like maybe 5%, maybe 10%.
Yeah.
But they will love to finance those premiums for you.
They're in business to charge businesses. So.
Yeah. They're in business to loan money.
So not to ignore everyone. I know that everyone's, we got people from France, from India, from London. Nice. Michael and Caesar asking to take a look at some of these templates. So what I'm going to do is I'm going to open up this sheet here, and I'm going to go ahead and start it this way as far as the custom dashboards, and I'll go ahead and skip this here. And if you want a copy of these slides in the chat, just type in slides, and we'll jump in your DM or your InMail and send you a copy of it. We may use this as a post, so if it is a post, we'll send you a link to it. So just type in the word slides, SLIDS, and then we'll get back to you. So I have 3 major dashboards here, but before we get into the 3 major dashboards, can we talk about, like, there's a lot more. So can we categorize this just verbally, so I can get a...
Well, as I was talking about the e-commerce people. Mm-hmm. They want a dashboard that shows them traffic. They want a dashboard that shows them daily sales, average number of sales, average value of each sale, all that kind of stuff. In fact, they can generally get sales by the hour, and they can see what hours are peak hours.
Oh, because they have volume of sales. Yeah.
Yeah. So if they can look at that, study that, and then start directing, okay, we need to put more ads in this hour of the day, because people are going away. So let's put some more ads like an hour before that, see if we can boost sales there. Like I said, tax dashboards. Are your sales taxes being paid? Are your payroll taxes being paid? Are your income taxes being paid? Or your property taxes being paid? All the different taxes you pay. And again, not everybody has sales tax. Mm-hmm. Not everybody has property tax, but everybody's going to have income tax and payroll tax if you have payroll. And those are critical, because the IRS takes underpayment or non-payment of payroll taxes more serious than anything else. they consider the employer as a fiduciary of IRS money because you're taking IRS money from your employees, and the IRS wants their money like now.
Oh yeah, yeah. It makes me wonder. Like other countries do it a little bit differently as far as the individual receiving taxes. The country itself does their taxes versus here we do our taxes, and if we're wrong, the IRS penalizes us. They're like, it's like saying, how much is a pizza? Like I don't know, $20. Nope, $22. You're getting charged $5 for a fee. So that's what keeping your CPAs aboard. That's why you're making so much money because
Yeah.
the business owner is just doing the best he can, and applying those laws. So these are like three major dashboards from reading from left to right. One is a cash flow projection. The second one we have here is sales, and the third is receivables and payables on one sheet. And so we're going to kind of concentrate on these three. I know there's a lot more, and every business may have a very particular type of dashboard, but I think you mentioned that these three are the most important primary areas because they allow companies to move. So the first one again is a cash flow projection. And can you kind of walk me through this slide here?
Yeah, it's just, week to week to week. It starts out with how much cash do you have on hand now, right? Generally Monday morning, Sunday night, what cash is in the banks? Do you have any outstanding checks? Do you have any outstanding deposits? And then you come out with the 964 is with cash balance net of outstanding transactions. So this particular one is for an e-commerce one. And I think at the time it was 125,000 per week in sales. They were averaging better than that, but just to be conservative, we said 125 less credit card fees. So it showed them at 129.75. You pretty much count on that coming into the door. From there, we drop down again. It allows for other things: employee loan repayment, shareholder contributions, any other incoming receipts. Because that happens from time. That happens from time to time. Anyway, you come up with total cash available. Then you look at what are your fixed expenses, what is your payroll, your rent, payroll taxes, bank notes, service contracts, any leases you have, all the stuff that whether you sell $1 or $1 million, that's an expense you're going to have. Right. So you time those out for each week. Like payroll is generally going to be in the first week and the third week because you pay it at the end of the month. Cash comes out first week of the month, and then you have the 15th of the month. It comes out the third week. Or if you have a weekly payroll, whatever, so that's where you put those rent generally the first week of the month. But anyway, you time that out. So if you looked at that fixed expenses outgoing, it's $37,000, then $569, then $18,000, $10,000, $37,000. It changes.
Yeah,
it's not a flat thing.
Right. Because
from there you go down.
If they're software, if they're engineering, do they sell software or they sell services or what in this particular case?
They sell products.
Products. Oh, multiple products.
They sell products. They sell products to end users.
Got it. And so certain months are just going to be higher volume, and depending on what products they end up representing.
Well, that's down to the next line: accounts payable and credit card payments. You see that changes as well too. 222,000, 146,000, 85,000, 210,000. And again, what you take with that is you take their credit card payments. And like American Express to do the 23rd of the month. So whatever week 23rd of the month is, credit card's going to get paid. Then you take their payables and you can what I call spread them out. Like how many are you going to pay this week, next week, third week, fourth week, fifth week? You spread
as you're getting cash flow coming in. You're saying,
well, cash flow going out, right? And then
but I mean, you want to spread it out because you don't have a big lump. You get money coming in all the time,
right?
And it makes it a little more comfortable to break it up,
right? You want to spread them out to match your cash flow. Anyway, so below that, if you have a line of credit, you can show it coming in and out there. Estimated income tax payments for 2023. 18,750. That's the quarterly income tax payment. And so from there, when you look at fixed credit card, accounts payable, and what you don't have is cost of goods that says outgoing. If you went over enough columns, So let's just say 7 weeks out, you don't have any of those goods in your inventory right now. You're going to be buying them. So you can be paying for them. And so you have to show the cost of goods sold for those future things so you don't dilute yourself and look like you're going to raise a bunch of cash. Anyway, you come down to ending cash for the week. It's a beginning cash. So the 825 ending cash position. Next week, it's a beginning cash position.
Yeah. So I'm going to say this. Hey, Lisa, why don't you, for everyone else, if you want to have a conversation with Cary about this, you're a CPA, this is just a presentation. We'll definitely give the slides out. We'll also talk about the well-oiled machine process. But I think this is something that you want to talk to Cary about because Cary's very big on partnerships and helping other individuals. And if you have clients that needs some of these, you should really book appointment with Cary. Lisa, can you go ahead and add Cary's a calendar link on it here? And also for everyone else, if you want to talk to Cary, just say talk to Cary, and then we'll also send you a direct message on that for a meeting. Because to be honest with you, Cary, I make stuff. I don't know anything about CPA stuff. So when you say numbers, it just kind of goes over my head. I know the concepts. So you're saying all these numbers, but I'm like, okay, so I understand concepts a lot better. So I know the CPAs will catch on a lot quicker than I am.
Yeah.
But the cash flow projection, I think I get why you want that, because you want to see how much money is projected, how to spread out the bills so it's comfortable, and so you don't inflate what you think you're going to make or how much cash you're going to raise through the business prematurely, because, and it's also seasonal too, because they may have a certain hot sale for a new product that may boost, and whatever the case may be. And certain people purchase stuff at certain times. For example, their first quarter, usually they purchase a lot on the first financial quarter and the last, because they have to, on the last, they have to release the money if they're getting a normal amount of money coming in, depending on if it's government or if it's a certain type of funding they're getting, or whatever the case may be. They may have to release and sell and buy stuff at the end of the year. And that would also affect your cash flow projection. I would imagine. Yeah. Am I thinking correctly? Okay.
Yeah, no, absolutely.
I'm kind of making this up, So.
Now again, is this exact? No, absolutely not. Not exact, but it's close. All right, you can get relatively close to it with this. And what it gives the business owner is, I don't see any icebergs that I'm sailing into. Everything looks fine. Okay. But again, you have to have good data. Your accounting department has to have good data of what's coming up to be paid, all that kind of stuff. If not,
so if you're a CPA, and you have these visual dashboards, allow them to make decisions for, we're talking about cash flow projection, right? What size companies really demand this type of stuff? Because if a company's making like $30,000 a month, I don't think it's not necessarily important to run this.
Actually, pretty much almost any business size can benefit from this. Looking at cash flow, looking at cash flow projected, because, like I said, a lot of business owners do is like they make decisions based on how much money is in the bank today, not realizing you have some big payment coming up.
Right, definitely.
So you want to be able to see is cash. Are we okay with cash? Are we, anything coming up that's going to rock the boat? And it gives you a good handle on what are my fixed expenses, what are my payables looking like. I don't know. Like I said, the biggest thing business owners tell me, especially about the cash projection, is it gives me such great peace of mind. I don't worry about cash anymore.
I think if they do have a good peace of mind and sense of control, that's huge, because what that does for the business owner, it allows them to be a business owner. I think the most powerful thing you can be as a business owner is, if I need to make a shift and change, I need a clear mind of why and make that decision. Because at the end of the day, these small businesses, they're trying to get out of all the hands in the cookie jar and just make decisions on how the company should go. What kind of relationships should we be building, and the vision for the future. So those are the things I believe those dashboards do. They allow the owner to be the owner,
Yeah. Well, okay. Here's the analogy I like to use.
Mm-hmm.
Your car has a dashboard. Do you pay attention to the dashboard all the time? No. When do you notice a dashboard? When it's flashing, something's going wrong. You're low on fuel. Your battery's not charging. Your engine's overheating. In my truck, I get a notice if one of my tires loses too much space. It gets below, I think, 30 pound per square inch pressure in the tire. I get a warning notice.
Mm-hmm.
So the dashboard helps you navigate. It helps you to tell you, like, is there something going wrong, so you can stop and for the correction. Same thing for these dashboards. That's what allows the business to do. They don't have to get into the weeds of their business every day or every week. They get the dashboards on a weekly basis. They go through them with their leadership team. If there's a problem, so whoever's on the leadership team that handles that area should already be on top of it. They should already know about it. And the management team then addresses what may not be going wrong, and maybe with some input from the owner. But the owner is what you want to avoid. You don't want to go, the owner's going to jump in there and say, okay, we're going to fix this my way. Let your leadership team do that. The two biggest jobs the owner has is being the visionary and being the main revenue generator. I mean, that's what got you into business to start with, right? Because you had a vision about what's possible, how you can help people, and I can make some money doing this.
Right,
So
right.
anything
He
else,
should be only it should be only called in if there's a cog in the wheel.
Well, the owners, yeah. If the leadership team can't, quote, address the problem, then yeah, they might have to call on the owner. And again, rather than fix it for them, tell them or show them how to fix it. It's the only way you're going to get a team that's going to be able to run the business without you. To where if you want to take off for 4 weeks, you can. You want to, I don't know, go on a sabbatical. You want to go clear your mind. You just want to go spend some time doing it.
That's a great point. That's a great point because I'll be 52 next month. I don't want to work 80 hours a week. Like, I don't want to do that. I'm like, I want to take a vacation and not worry about the business falling apart. And so these business and processes are set for a reason. And these dashboards allow those processes to be executed, or at least identified.
Right. So here's the quote, the magic sauce for CPAs. If you can create some dashboards for your clients and show them how to better manage their business, show them how to take action, show them actionable financial data during the month that they can take corrective action on, you become more the trusted advisor than just my accountant.
Right. You're the go-to person. Yeah.
Yes,
and that's what the CPA really should be. If they're able to be the go-to person, and then just business-wise, if I'm working with someone, there's unless it's industry specific, there's usually a kickback. I mean, let's just be honest. We're all in business. If someone brings in a sale for a salesperson, they get a percentage of the sale, right? Well, if you have a partner and they're a CPA and they're bringing you in, there's usually a buy-in or some kind of relationship, some transaction, as long as it's not against any of the rules or anything like that. It's a smart move. It's a business move because everyone here is to generate sales and business and make money. So this is the second dashboard sample we have is sales. You want to talk on this a little bit?
Right. So what it shows is like, okay, and again, it's vetted back to 2020, but it shows what the revenue for this week. And this is for a company that did a lot of, what do we call it? Fire prevention, fire mitigation, it's safety stuff. So for that week, the sales are 200,000. Month to date, they're 498. So then you look at what's the average weekly sales, 249 so far for the month. And again, if you roll down the bottom, you see the budget for the week is 250. So for 2 weeks into the month, it's 10. And then year to date, at this time, the budget would have been $2.5 million. So where are we? You're averaging almost what you're supposed to do on a weekly basis, right? And on an annual basis,
this left number and this right number are balancing out. You're saying so that's a good indication that your numbers are on track.
Well, yeah. So, but again, here you are. 317, you're in the middle of March, you're at 498,000 for the month. You're close to being on track with the $500,000 budget for that month. So is there anything you need to take? Is there anything you need to do? Is there anything, maybe boost your sales team a little bit, call some customers, or have your leadership team call some customers, see if maybe you can discount something, make a flash sale of, okay, this week's this product 10% off, that kind of thing. In other words, it's showing you what's going on so that you don't sit there and wait till next month and find out, oh, we missed sales by 30%.
Right.
This is what's going on now. What action can you take to improve things? And again, if you look at it year to date, you're at $1.9 million. If you look at the 2.5 months into the year, so you're averaging $770,000 a month. And again, this company in the budget was really weird. It wasn't like it was steady. It wasn't like they had a really big period. Different months had different sales volumes. That's why it looks, if you're $500,000, you're 2.5 months in, how are you at 2.5 million? You should be at a little about $1.25 million. Anyway, so it shows you, like you're behind your annual budget by a bit, by about 500,000.
Yeah, showing the trends where you should be, what's estimated. And like you said, if they're behind, you don't want to find out a month later, because then you might have to be laying some people off. So you need to take action right then and there to kind of mitigate those issues.
Yeah, but and this will show you. Okay, so are you? Do you want to do something about this month? How about making up some money for the year, because you're about $500,000 behind? And the further it goes, if you don't take corrective action, the worse it's going to get.
Right. Here's the fifth dashboard here: receivables and payables. This is actually on one document.
Yeah. So really, what you want to do with your receivables and payables is you want to see what percentage are they at current, 45 days, 60 days, 90 days. And this particular client, that's the way they like to see them. They didn't like the 30-day, 60-day, 90-day. And they had a major problem. They had a big customer that was in Mexico, owed them $570,000, was a third of their receivables.
Oh my gosh.
Right? And they said it was collectible, but it's like when? It was old. It's that, and you can't. It's not like you can go down to Mexico and put a lien on them.
Yeah, you can't knock on the door and say, "Can you pay me, please?"
So what that problem with receivables reflected in payables, in that they had 244,000, or about 21% of their payables was past 120 days.
So at least it brings the attention up. So they said, "Well, what are my options?"
Right. So. And they were just sitting there. They really weren't pressing the big customer down in Mexico. It's like, let's start doing something. Let's start seeing if we can get them to make some kind of payment, make some kind of agreement. And eventually what happened was, and I said, I did this 24th, this really goes back to 2020. What happened was they were able, we had several video conferences, Zoom conferences with the customer. And we're able to actually get them to agree to a payment arrangement. They started paying it, caught some things up. And this was all back in COVID, and COVID, it's like they were restricted on what they were restricted on what they could do. So the money coming in from the Mexican customer actually came in very handy. But it was like, you just can't sit there.
Right. So when they're able to see this data, they're saying, okay, these are our choices, because but the first thing, the red flag that I see is, don't have a single customer 1/3 of your receivables. We need to diversify so we have more income streams, because this happens to someone, we have to lay off people in our business, and that's not cool. And if we lay off people, we don't have the manpower to do whatever our business is supposed to do.
Right. It's interesting that you said that, because that's one of the biggest things that I had to work with this business owner is. Again, he's South Louisiana. It's a South Louisiana business. And there's a lot of businesses that are related to the oil field. And when the oil field is booming, life is great. They're buying stuff. They're paying you. They're paying top prices for everything.
As soon as solar panels come up.
What's that?
As soon as solar panels come up and other energy things to get cheaper, a little stopgap happens there.
I don't see that happen anytime soon. Anyway, but when the oil field turns down, it turns down pretty severely. And he was about 90% oil field. I said, your number one priority as this owner is diversify your revenue streams out of, not just, don't stop doing, I'm not saying stop doing oil field. I'm saying you need to get out. And again, so universities, hospitals, institutional type stuff, police police departments. They had
Yeah.
all this stuff. So he started diversifying, and eventually, he's not so tied to oil and gas.
Well, if you have if you have peaks and valleys, that valley can be a valley of death, and you can never
Yeah.
get back up, because
It,
a lot of times what happens when you hit rock bottom, people have special skills. They're gone. They have 10, 20 years of experience. You get someone else back in there, they don't know the hell they're doing for X amount of time. And so what you're saying is, by diversifying, even if something crashes, you have something else to fill in that gap
right.
before. So you don't have to. So you can make sure that things are still running in order to come back up. It's almost like it's a buffer. That's what I'm seeing there. So I think that identifying what things that has to happen, like you said, is how do we get these bills paid?
Right.
If someone owes me $500,000, I think you mentioned, can we put them on a payment plan? Can we switch up the service where they can pay in this way? How do we get them to pay and still be a customer?
Right.
Because after a bill is so old, I mean, there's nothing you can do about it, right? I would imagine the bill's like 5 years old. Like you didn't collect them 5 years. Good luck with that.
Right.
It's not really going to
Yeah.
happen.
If it's 5 years old, unless there's some kind of, I don't know, security or something, you can count on that money's gone. Ain't never coming home.
Oh yeah. So you have to be diligent to make sure that money's coming in on a regular basis. And even if you have to take a hit, how do you reduce the hit?
Yeah.
Like if someone owes me $500,000, I'm never going to collect it. But I know they're getting this deal done, and maybe they'll pay 2/3 of it, or whatever. I'm making this stuff up, of course.
Yeah. No, anything's better than nothing. You're right.
Yeah, definitely. So those are the three dashboards that you talked about. Another thing here is the well-oiled machine process, and if anyone wants this, and I would say just type in the word guide, GUIDE, and we'll send you that whole document. But these are just 3 pages. There's a lot of checklist items on this. This is something that you and I were working on together, and you had the process. I just made it look pretty. So I work with Cary to make stuff look good, and we got this really handsome document down. And this document is separated into 3 categories. It's actionable financial data, it's eliminating dysfunction, and then strategic planning. And so that's a pretty important guide, because, correct me if I'm wrong, Cary, because I don't do this job. You use this document, and I think it's like 15 pages long. It's a literal checklist. And you go through this process for what, all your clients, or just some of your clients?
It was those who choose to go through all 3, which is most of them. Yeah.
Most of them, because what this does allows you to formulate these dashboards easily, because you can understand some of that data in there. It allows us to figure out, well, what's the cog in the wheel, what's stopping the eliminating dysfunction, and is it the fact that maybe you don't have a guide on how to do A, B, and C, and they have 10 different ways of doing it, and in that ways may not be predictable as far as how long it takes to get done. So a lot of that is eliminating dysfunction, who makes decisions on what timelines, and the strategic planning is the last part where, and correct me if I'm wrong, where you're actually understanding not just where stuff is, but where does a company need to go.
Right. Yeah. We haven't really talked about strategic planning, but that has to do with designing your business into the future. Everybody talks about, I want a next level business, Well, strategic planning is a way that you design your business into a next level business. Because if you're not planning where your business is going into the future, forces of the market, government, technology, manufacturers, competition, they're gonna push your business to someplace you may not want to go. So you have to always be on top of, where's the business now, where's it headed? Are we headed to a constant spot on the horizon? And in terms of, and my thing with owners is I focus on satisfaction, not with what's going to make you happy. And satisfaction is a matter of enough action. So what's going to be enough action in 5 years in terms of revenue, in terms of profitability, in terms of how much time you can take off, in terms of the employees you have working here, in terms of the company culture, in terms of the market, the goods and services you have, all that stuff as much as possible. What is going to satisfy you? Because if you don't declare what will satisfy you, nothing will.
Mhm.
Does that make sense?
Right. So make you happy is, let's just be blunt, is a feeling. It's how I feel
Yeah.
now. What makes me, and
Yeah.
happiness changes, feelings change.
Happy comes and goes
So
all day long.
you have an objective of what, where an agreement of, this is where I want to take the company, and it's a little more
Yeah.
tangible, because everyone goes through tantrums, happy times, sad times, and all that, and so their feeling could change in midstream, where it would affect everything. So what would make them satisfied? Like, this would be a great result if we get in this direction to make this happen. That's great. And then you help put that together and put a plan of action together to allow them
Yes.
to get in that direction.
Yes. A plan of action with accountability, because it's the team members going to actually execute the goals, right? That your job as owner is be the visionary. What do you want? What do you see the vision of the future? So that's why you have your team, because they're going to execute the actual the steps and goals of the tactics. And you have you have a quarterly meeting to make sure that things are moving forward, that action steps are being taken, that goals are being accomplished, that people are being held accountable. And generally what you're going to see is you're going to see who your really good team members are and who maybe aren't so good.
Right. If they're not team players, or they don't really care about the direction of where the company needs to go.
Right.
Yeah.
Well, you'll see who's bought into your vision and who hasn't.
Right.
If they bought into the vision, they're going to be on this stuff. They're going to be ambitious about it. They're going to take action. They're going to want to be held accountable. If they haven't bought into the vision, they're going to it's more BS, that I got to do.
So this process is, I think I asked previously, I didn't really get a good answer, but companies that use this well-oiled machine process, what size are they usually?
Kind of
Because
all
you talk
over the
about team
place.
members and getting things approved, because like I'm an entrepreneur, I got people who work for me, but they're not my employees.
Right.
I got several assistants that do this. I got whole teams that do development. I manage some of those processes. I try to separate on purpose, but I'm like a one employee type of person, although I may have 50 people I work with.
Right. So you're saying what size company?
Yeah, because if they don't have a big enough size, it's hard to distribute the work for
Right.
those.
Yeah,
For the
you're right. You're right about that. If it's just the owner and an assistant, it's going to be difficult to implement all of this, right? Because the owner's not going to have enough time as it is.
Right.
So generally, it's a company that's gotten to maybe 10 employees. They have a revenue stream around 5 to 7 million and up.
Okay, got it.
Yeah. So let's say, and I've worked with companies that have $75 million of revenue, but they didn't have any process to document it. The owner was managing about how much cash is in the bank.
Yeah, he was lucky.
I mean, again, a company that size, the big icebergs in your cash flow, they're really big.
Yeah,
they're really big.
Yeah.
He didn't have any tax dashboards. And I think it was in the first 4 weeks I was working with him, IRS showed up and said, we want $106,000.
Yeah.
And so he freaked out. I was like, okay, let me meet with the IRS. So I met with the guy. He goes, I said, what's 106,000? He goes, payroll taxes. I said, you're going to have to show me. He goes, why do I have to show you? I said, you just gave me 106,000 reasons why. I want to see the details. So he starts going through this stuff. And what it was, the IRS had misplaced their payroll quarterly filings, the 941s. So I pulled all the 941s for him that we already filed. He goes, oh. So
yeah, they're human. They make mistakes. I think they make mistakes on purpose, to be honest with you. They kind of,
maybe.
But
anyway, what happened was there were a couple of late payments in the taxes or whatever, and I think one of you actually got underpaid. Anyway, the net bill was like $6,000.
Oh,
so the owner was happy to write a check for $6,000 out of $106,000 because the IRS the collection guy who showed up, he was what's that word in the old West? He had a lot of hard bark on him.
I haven't heard that term before.
You got a lot of hard bark on you.
No, that's
like
not. I'm
anyway.
not a cowboy person, but yeah, he was a stiffler. Definitely, he was a very yeah. If anyone have doubt with the IRS, it's best to have a lawyer, because they do not care, and they will tell you something and you won't understand it, or they'll just and many times they'll just lie to you, and they don't think they're lying, but if you ask them a question and they answer the question, you don't have it recorded, and so you're making decisions based on what they say, and more than often all they care is about getting that revenue in. So
Right.
so a $6,000 bill is much less than $6,000 for sure. So he was probably happy. Extremely.
Yeah, he was very relieved, because the tax man walked in and had this demand letter for him. He's like 106,000. He calls me, didn't know what to do. I said, let me tell the IRS, tell the guy I need to meet with him tomorrow. And so we met and went through the whole thing, and most of it went away.
Oh, that's great. That's great. That goes along with the peace of mind. There's two things I want to show here. I'll go ahead and share my screen, and Cary, let me know if you can see it, because this is technology, and half the time this stuff doesn't work here. So this is the document of the well-oiled machine, and I'll go through it pretty quickly because I only had a couple of screens on here. Can you see the screen, by the way?
Yeah. Yes.
Okay, so this well-oiled machine process is great. If you're a CPA, it might be good to understand the concepts of this. So when you're building some of these dashboards, or you book a meeting with Cary to help you build some of these dashboards, you kind of understand where the data is coming from, and why it's there, and what the company needs to be set up. Not saying the CPA has to do all this work. That's why they bring you in, or people like you, to kind of walk through this. But you've used this process for a while, and you tuned it in, and I think you said majority of your clients use this. And
Yes.
So Actionable Financial Data, that has to do directly with the spreadsheets, eliminating dysfunction. That has to do with understanding processes and who does what, how long it takes. And then planning is for growth, stability, and so on. And so I'll just take a look at this, managing by the numbers. You literally have a checklist. And so if you guys want this checklist, go ahead and type in guide, and we'll send this to you. But it's pretty important, because you're going through these. Do you want to briefly kind of go through this as I'm sliding through here? What does managing by the numbers mean?
Exactly. A lot of business owners talk about, I want to manage by the numbers, but
I hear it all the time. Yeah.
They never look at the numbers. And even then, a lot of times what happens is the accounting department says, here's the financial statement for last month. Look over it and let me know tomorrow if you have any questions. And guess what? They never have any questions, or they very rarely have questions. Why? Because most business owners do not know how to read their financial statements in any depth. They look at sales, maybe they look at cash in the bank. It's like a bunch of numbers on a page to most business owners. So when you can get in and show the business owner, what are your financial statements saying about your business in terms of financial strength, in terms of liquidity, in terms of profitability, and in terms of efficiency? That's what financial ratios do. And say, okay, and here's the norms for your industry for these different ratios in terms of financial strength, liquidity. And so you're either above or below. And what do you want to set as goals in the future? Part of strategic planning. What do you want your business to have? Let's say the average, what they call the current ratio, which you have current assets divided by current liabilities. The standard is like 2 to 1. Okay. Well, in your industry, maybe it's 3 to 1, and you're like at 1 3/4 to 1. So do you want to set a goal to get your current ratio up to the 3 to 1, like the rest of your business, or beyond? That's a measure of liquidity. So anyway, so when you can start telling the owner, this is what your financial statements are saying about your business, and these are what the ratios, what do you want to improve? And this is what these are some ones I really recommend you improve on, and help guide them in terms of designing the business into the future, not just in terms of what the results they want to see, but actually also make sure they have a financially strong, liquid, profitable, efficient business.
So
Make
managing
sense?
by the numbers is not just the visual dashboards, which we've gone through in somewhat detail, but it's actually understanding all the other things to see where you're at compared to the market, and then what do you need to do in order to get there, and
Right.
that sort of thing. So that's really on the dashboard side, and then let's see here. Then you have having the business, having your business work for you, and let's see here, designing your business, one of three. So this part is really about
The strategic
understanding
plan.
the all the individual pieces and processes in order to put whatever is in the owner's head into a well-oiled process so other people can implement. Is that correct?
Yeah. This is the strategic plan. This is the, let's say, designing your business. In other words, designing your business into the next level.
Mhm.
It's not going to happen
Oh,
by
okay, so I
accident.
skipped this part then. That's this
Right.
part here.
Yeah.
Oh, having your business work for you. Got it.
Right. I mean, most business owners, when I meet them, they're working 80 to 100 hours a week.
Mm-hmm.
They can't take any time off. They don't know why their employees don't get it.
Mm.
They have to be called in to fix pretty much every problem that's outside the norm. And they're just frustrated. It's like every day they come in, it's like, what hot mess is going to be dumped in my lap today that somebody
Right.
couldn't figure out?
You got pressure
So
cooker.
processes. So what happens is the owners all over the business insisting my way. And what happens too is the employee that screws up or can't handle it, generally, now these aren't the words I necessarily said, but the message comes across as, what are you, stupid?
Yeah.
So
Yeah.
it kills morale.
Yeah.
What happens is, and especially if you start you start managing your business by chewing people out all the time, guess who's going to leave?
The people doing the work. Yeah.
Well, the good employees are going to leave, right? Especially if they're having to carry the weight for the not so good employees. And what you're going to be left with is a bunch of you're going to be left with a bunch of employees who are going to do what's the minimum I got to do to just keep getting a paycheck here.
Yeah. So it stifles any ability to go above and beyond and doing quality work.
So when you start getting processes to document, and everybody's following it, things start working better, and the owner's out of the way. The owner's not out there with his hands in everything, chewing people out. Guess what? It's much more pleasant to come to work, and then everything's laid out. Here's a process. Just follow it. Don't try and reinvent the wheel. Just follow the process.
Yeah.
Morale goes up. Productivity goes up. Business goes up.
So this is a deep dive on figuring out processes, basically,
right?
And identifying a process that can be followed.
Not just figuring them out, documenting them.
Right.
And the management team using the processes to manage the business. That way, the owner's not having to sit there and run around and do everything all day. He's not putting out fires. They can go off and do their visionary main revenue generator thing, which is what they're really gifted at.
And so this right here, which it's a lot more checklist, I noticed, that you are designing your business into the future. So now that you have processes, you know how much you're making. You can identify, you can design it where you can go after markets to increase the business or change the business or all those type of things. And so this is where you're designing just for not just for stability, but for the future.
Right. Yes. This is just it seems longish. It is work. And, and there's some work that the owner's going to have to do. It's your vision. It's you're going to have to take some time, reflect, write about what it is what's going to satisfy you going into the future.
So as an owner, if they were at the right size, how much time do they need to invest per week to get to a more of a stable place?
Well, if you can get your dashboards,
changes, but
if you get your dashboards going right, that's about an hour a week. If you can get the processes all laid out and the management team's managing by the processes based on the owner saying, these are the results I want to see produced in this time frame, in this financial constraint. Now, if you can get your leadership team to produce those results in the financial and time constraints that you set forth. There's nothing for you to do except go be a visionary and go generate some revenue, right?
Yeah, that's what you want
in the business. You got to go forward. That is the end goal of the first two first two parts of the well-oiled machine process to free the owner up to where they have a lot more time to go do what the biggest contribution they can be to their business is to be the visionary and the main revenue generator.
Mm-hmm. Definitely. I'm gonna skip through these other items. You have video testimonials of other clients right here with videos in it. And then you have your thank you page with your information. One other thing I'm going to show here is your profile. I guess as you have a live too, so it's showing it right here. But this is his profile. Feel free to connect with Cary. It's just Cary Prejean, and it's spelled Pregean. Definitely send a connection request. And again, if you want to have a meeting with him, just type in talk to Cary. If you want a meeting with me, type in talk to Troy, and I'll reach back out to you for any of the LinkedIn stuff. And so I'll jump back on and unshare, stop share screen. Here you go. Yeah, so let's see if there's any other. We have a couple people asking for guides. So what I want to do is I want to thank you because although I've helped you with some of these guides, it's great to hear in a longer conversation because the information can be understood. Because once we have these little bits of information and these posts are going out, it's all great. But unless they understand, like CPAs, if they don't understand why this is important, then they're not going to stick around. They're not going to use this process. And so what I've gathered is for CPAs, they generally show the numbers, but if they could provide the value of actually having some of these dashboards, they become invaluable. They become invaluable and a go-to person. And when you become invaluable, you can not only charge more money, you can charge for more services, and you can bring other services in. And so those things are beyond the regular CPA. You know, I talked to a couple CPAs and I asked them, I said, you know what? I don't want to own anything. I just told them that. They had no idea what I was talking about. I said, I don't want to own a house. I want to own one car, and I want everything to be on the trust or a company. And I don't know how to do that. They don't know how to do that either. They don't know how to do that either. And it's just because they're not really privileged to like company structure. So if they could be aware of those things, they could add a service that's very valuable to the owner, you know, because what happens when you protect your assets, they can't go after you. They may have to go after a company, and at least you're limiting your liability. And so that's if they're aware of some of those things, like just cash projection, how to move stuff forward. There's an option to reduce this. If they can at least bring it up, then they can be the I wouldn't say superstar, but they can be the point of contact that brings those other things in. Because at the end of the day, CPAs and everyone else, we're in here to do a good job and to have a business. And one way to do business is through partnerships. You know, we got a couple.
Yeah, no. If you can help your clients with dashboards, actionable financial data, that kind of thing, you will become a trusted advisor, because all of a sudden you're making to a business owner, all these numbers just look like, you know, all this chaos. So if you can give it to them and like, okay, here's some data you can actually take some action with. You can correct stuff during the month rather than waiting for next month, get the financial statements too late to do anything. You become more of a trusted advisor rather than just my accountant. And guess what? Other business owners, they know when I say, hey man, I'm not really happy with my accountant. Who do you have? Oh man, I have this great guy that got me on, you know, does all my stuff, all my compliance work, does my financial statements, and they help me with these dashboards, help me to, you know, make things correct in the month, or take corrective action in the month rather than waiting until next month and nothing I can do about it. You need to meet.
Yeah, that's a differentiator. That's a huge way to separate yourself from everyone else. Yeah. So if everyone else is doing the bare minimum and you're the superstar, and it's only a pay per play model where, yeah, they do that, and it's just this little bit extra. You're getting your foot in the door to open up other services, and that makes a huge difference. What do they say? Someone else tooting your horn is a lot louder than you tooting your own horn. So if you say, hey, I'm Troy, I'm the best LinkedIn guy, blah, 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 I look like a jerk, you know? But if someone says, hey, Troy's a great LinkedIn guy, and he does this for this whatever it is, he helps do A, B, and C, and they're recommending you, it's usually just a discussion to close the deal. So that does make a lot of sense. So it's always best to have other people speak good about you
Yes,
in order to close deals,
absolutely.
So thanks, Maria. We'll send you the guide, and we will also send you the slides. If anyone else wants the guides or the slides, go ahead and put in the chat. Even after we close, we'll take a look at the chat, and then tomorrow we'll start reaching out to people. Another thing too is feel free to talk to Cary. Just type in "talk to Cary," and then we'll get back to you with his direct booking link. What do you got, like 30 minutes slots or something like that for
Yeah, the
CPAs?
first meeting is generally about 30-minute slot.
Yeah. So no cost, and it may make all the difference in the world for your business. So, Cary, thank you very much. A lot of information. So I think I get the gist. When you're talking the numbers, it was like, but when you talk about the sections of why they're important, I said, oh, okay, that makes sense. I guess the numbers would make sense if it was my business, but everyone else's business is kind of all over the place. Thank you. And any last words, Cary?
No, thanks for having me on the show. I've enjoyed it. It's been a great conversation.
Yeah, awesome. I think it was a great conversation. Thank you very much, and thank you everyone else, and have a great day.